We had buy side and sell side here, framing a very short window of time of liquidity pools during this dead zone. This is Tuesday, an ideal trading day, right? Tuesday, Wednesday, Thursday, even Friday, even sometimes Monday, but generally those 3 days, Tuesday, Wednesday, Thursday, a lot of volume comes in midweek. So you're going to get a lot more movement out of the market on these days. So this would be a day that you want to seek opportunities here, especially during the kill zone. We take this as sell side because we don't have any swing lows here that's available to us. So we're going to use this low as our sell side liquidity pool. And we have this swing high up here as our buy side liquidity pool. We got that 7 a.m. indicators. The market will tell you it. It's just up to the operators. It allows us to know where overbought and oversold this without any indicator. Price breaks that swing low. Sorry, price breaks that low. And at that point, I tell myself, okay, what do we have available to the market? Now, it could continue to go lower. Like I said, there is sell side and buy side outside of this window of time. But I'm not really concerned about that. I just know that it rated sell side, and now we have buy side available up here. This is going to be my draw. I want to see price try to get back up to here. It may not get all the way up there, but it still may produce an idea for us to go long and catch something intraday during the kill zone. So I go from the 15-minute time frame down to the 1-minute time frame. That's the pattern every single time. Deontay does not change the way I do it. I don't like to switch it up too much because why? Why make it more complicated for myself? Let's play it forward. Now I'm looking for a specific entry. It has to be a swing point broken with a fair value gap. This entire time that it's going down, excuse me, the entire time that it's going down, we're looking to see if we get that entry idea. Let's keep playing it forward, and it drops. It keeps dropping. It drops. It drops. But we don't chase this. Most people may say, I want to sell because it's dropping. That's up to them and their discretion. Right here is our entry. It just tapped right into it. There goes your fair value gap. There goes your swing high. It's not that I'm picking any random fair value gap either. You guys know that we're very specific in what we're looking for. All we're looking for is a fair value gap that runs through some type of swing high. That is the cue that the algorithm may start to gear up to push higher. Possibly. It's not guaranteed because you guys are going to see some setups do fail. Nothing is guaranteed, but you can guarantee how much you lose. That's a guarantee. Remember that. None of your trades are guaranteed, but it's up to you to guarantee how much you can risk. No one can control that but you. But for the fellas or the ladies or the traders in general that are struggling with, oh, I'm down 3%, I'm down 4% in drawdown. That's a you problem, right? I'm sorry. Hey, as bad as it sounds, it's a you problem because you are the person that went in there and risked that amount every single time. Got to have proper risk management. If you're going to lose a trade, your following trade, you need to cut risk. Until you mitigate your losses, then you can start risking that percent that you like again. So let's say you like to risk 2% per trade. You lose a trade, that next trade you take, it better be either 1% risk, a 0.5% risk, or 1.5 risk. You can't risk 2% again because if you take two losing trades now, you're down 4%. You're just eating away at your equity. You got to cut risk. And I know it sucks because now it's going to take you longer. Oh, now I can't get back to where I was to get out of the hole that I dug myself into. It's okay. It's a marathon. Take your time. Stay consistent. You will get back to where you lost. This is where we would go long on the top of that fair value gap. Like ICT would say, institutional order flow entry drill. It's a drill. It was just a drill to get traders familiarized with entering with a market execution right on the dot on the top of that fair value gap, the premium side of that fair value gap. I go for a 1-to-1 scenario, 15 pips for 15 pips. You may choose otherwise. You may go for 10 to 10. You may go 5 for 5. 5 for 5 is too small. 10 to 10 is like just cutting it. 15 to 15, I think is just perfect. Press play, and we hold. And we watch to see what price is going to do. And as you can see, at the end of the session, we get up to at least probably what? I think my eyes are correct. That looks like 7 pips. 9 pips, not bad, right? And we were looking for 15. So at this point, you could take something off the table. You could move your stop loss to break even. I can't tell you what to do. You could do a few things to reward yourself for waiting for this idea. Yes, we endured some drawdown. We know that happens sometimes. It's not the end of the world that we endure drawdown. You know why? Because we risk properly here. We don't risk more than we can actually chew, you know? Don't take a bite more than you can actually chew. You're going to risk what you can actually handle. If you're risking too much and you're getting those signs of anxiety and being nervous and being anxious, you got to cut the risk. You know, you're lying to yourself, telling yourself that if I were to have price pull back on me and I would be down 2%, 3%, you know, you would be, in trouble. So why even put yourself in that predicament? You're wasting time. Again, you don't have time to waste. We have a finite of time on this planet. And if you're going to keep doing the same mistakes over and over and over again, I think you should stop trading. I'm being very honest with you guys. I think you should stop trading. You're just going to waste your time. Look to find another business venture or another way to find capital or something else on the side, or just stick to your job that you have in your career, because you're going to waste your funds and you're going to keep going through the cyclical cycle of being the trader that over leverages, blows their account, has to fund the account again, wastes the money. It's time and money. We don't got time for that here, guys. Let's play it all the way through, see what happens. And it looks like the price stop us out. We could consider that a stop out. Spread might have knocked you out at this point, but we'll play it all the way through. See what happens. Now this is the dead zone. Speed it up. And it got back to the 15 pips. But like I said, odds are it got very close here. Odds are it did get stopped out, but if he didn't, for some reason, maybe your broker didn't open up the spread on you, because those are things that happen. Spread might widen and knock you out. But let's say you didn't get knocked out, it still came back to be a successful trade idea. You just would have been holding some drawdown, and that psychologically can be stressful for the trader, right? You're in distress because you're looking at your account and you're down money. No trader wants to be down, so it feels like a lot is against you, right? It feels like the world is against you. The markets don't want to give it to me. But if you have patience and you understand what you're looking for, more times than not, I'm telling you, I've been doing this for the last couple of years, bro. You're gonna be fine. You're gonna be fine. You're not gonna win it all. You're not supposed to win every single trade. If that was true, I don't think any prop firm would allow people to sign up with them. Any broker, because you're taking money from them. And you're also making them money, but they mainly make a lot of money by traders losing. It's the whole point of the business model. And that is your New York model there. See, even though the entry is happening inside the kill zone, it's not that it's happening outside of the kill zone. It's happening inside the kill to close out the trade at 10 a.m. outside the kill zone. You can do that as well. There's many ways to layer and structure your trading plan and model. You just have to sit down and pen and paper, figure out what you like to do. That's what I did. I had to sit down, pen and paper, and figure out what works for me and my lifestyle and what I got going on in my day-to-day routine, and what makes it as simple as possible. I'm not trying to put myself through stress. I do not like to stress. I'm a young man trying to live long, healthy life, not trying to lose my hair. I'm not trying to stress over these markets anymore. I'm done with that. 2 years ago, I said, no more, D. There's no reason you out here stressing and getting upset and about to crash out about the market. I'm not crashing out about trading, bro. Life is so much more than trading. But that's the New York model here on Tuesday. Let's look at Wednesday. Now, Wednesday is a losing idea, but I still want to show it to you guys so that trading or always successful. Let's go into this Wednesday here. Go from 5. And shout out to those that like hit me up directly when I'm doing foolishness and not sharing my screen. I appreciate you guys. It allows me to be like, oh snap, D, focus up. I appreciate you guys so much. You guys don't even know. This is the swing low here. That's sell side. There's another swing low here. That's sell side. And we don't have any swing high being broken into 7 a.m. or the kill zone. So we're going to take this as our buy side liquidity pool. This is the opening price. That's 7 a.m. Now we got overbought and oversold conditions too. And before we move forward, I just wanted to take a look. Look at where we brought again. We brought below 7 a.m. We brought below the weekly opening price, and we also brought below midnight opening price. Because I know some folks may say, "Oh, D, you haven't talked about midnight opening price." You see, this line is the same price point as 7 a.m. So this line that I'm drawing right here, that's midnight opening price. That's a triple confluence idea, long. So you start to see this market is rigged. It's fake. It's doing things very specific to put itself on the right side to have the best opportunity for the buy. Hold it in the market. They can't change it. I don't know how they would, but I know there's a few people in the trading community saying, oh, the algorithm is changing, or they're going to change the way the market works because everybody figured out how this stuff works. Sadly, they can't do that. But hey, you never know. Things could happen. But I think that's something that is very unlikely. If it does happen one day, shoot, I'm wrong, But hey, 7 a.m. Let's see what happens here. Let's play it forward. You can see what happens here. Price breaks what? Buy side here. But the thing is, where are we according to Sunday's opening price? We're below it. So there's conflict here. It's above 7 a.m. in a premium, but it's below the weekly candle in a discount. So there's conflict there. But let's continue watching this. Let's say we were looking for the short idea, right? Let's just say we were looking for the short because it broke buy side. So what do we have below? Sell side and sell side. I'm going to talk about, what if we ignore this buy side and look for longs because it's below the weekly opening price instead? We'll get there. Go to the 1 minute. And let's say we're still looking for that same idea. Fair value gap, swing low. Let's play it forward and see if we have anything. There's a swing low, but it's right on the start of that fair value gap. So I can't consider that. So that short idea, I wouldn't consider. I would leave it alone. Now, let's say we were looking for, and before I get to that next idea, many people know this as well. It's a little tip I've been showing guys. The first fair value gap that forms, something that you guys should study. Oftentimes, the very first fair value gap that forms after breaking that buy side, fair value gap that forms on the 1 minute, oftentimes produces a nice setup. I'll leave it at that. I don't have to say too much about that. That's it. It doesn't need to be a swing point inside the fair value gap. Just the first fair value gap that forms after breaking that liquidity pool, oftentimes produces a setup. You can go study that yourself. Keep playing it forward. And as you can see, what happened here in the market, we got a purge and revert. It is not rocket science how we found these liquidity pools. Not rocket science. But it's nice to see that the structure and the framework is showing us where price could possibly draw to. What you're seeing is a fake move to the upside and getting traders to probably go long, and then them selling on top of the traders. That's it. Now we here. Like I said before, now we're starting to get more confluence. It's stacking now. Now it's not a conflict at interest. Price is now below Sunday's opening price or the weekly open, and below 7 a.m.'s opening price. And now we're taking out a sell side liquidity pool. We can now look for possibly a long idea. Let's see what happens in the market with G. Let's see if we can get our entry idea that we're looking for. There it is. Zoom in. It's the same thing. It doesn't matter how far away the fair value gap is from that swing point. It's still the same thing. Some people ask, is the distance or the timing of how close these points are or reference points are make a difference? No, it does not. There's a fair value gap with speed running through that swing point. That's an indication. It's a signal. Does this signal mean it's going to provide 100% guaranteed profit? Absolutely not. If I sat here and told you that, I would be lying to you. I cannot lie to you guys. It's not going to guarantee you 100% profit. The sooner you understand that nothing is guaranteed and given to you on a silver spoon or a platter, bro, the more you realize that, yo, you got to manage your risk. No matter how well the setup may be, no matter how quick the setup forms, you got to manage your risk. Let's say we're going with that idea to go long. You got a double confluence idea or triple confluence idea. You like the idea. We're looking to go long. There we go. Press play. And there we go. Look at that. 15 pips hit. I thought this was a losing setup. But yeah, 15 pips hit right there. Do you see how simple that was? I'm not over here talking about, central banks dealers range, +3 standards deviations, plus internal liquidity. No, I don't need to say all that stuff. All that fluff for nothing. There was shout out to the guy that put that meme in the Telegram channel. I was cracking up, bro. Oh my gosh, bro. If you are in the Telegram channel, scroll up in the discussion channel. There's a meme that was cracking. Yo, oh my gosh, I was cracking up, bro. But yeah, it's simple. You don't got to put no fancy term on it. You don't got to do too much, bro. Rinse, repeat, move on. People want to use all the higher vocabulary terms that ICT talks about. Yes, we are well aware of those things. But do we really have to keep using those ideas and making it seem more than what it is? You know, it's just a dictionary. You're just looking for another synonym, another word that defines this: higher highs and higher lows, lower highs and lower lows. We're done with that. We don't got to talk too much. And there goes that New York session again, that New York model. But here, that trading IQ would have to pick up a little bit. You'd have to understand, okay, what is the higher time frame trend telling us? Possibly, right? The opening price for the day, midnight opening price, and where do we stand for the kill zone's opening price? Those things play a factor into how the price action progresses through the day. As the day progresses, you will start to see where the market is most likely to go. At the beginning of the day, sometimes you're lost and you have no idea where the draw might be, right? On those lower time frame levels, you may not know. But again, when I keep it simple and I use these little dead zones to give me framework, I don't got to do too much. I know, okay, this is sell side. It could hit that and then produce a long. And look how it did it. It perfectly hit that 15-minute swing low and turned right back around. It's not magic. And it's not like I'm some genius or some wizard. I'm not, bro. See, I'm your average dude that just sat here and kept studying this. Study. I know other folks have definitely discovered this as well, but I'm just here trying to exploit it as much as I can to the trading community. Because I wish someone else had told me this 4 years ago when I started trading. I wish someone would have told me this when I first got my first funded account, or I first got my challenge account. and I blew it up. I wish somebody would have told me all these things. So that's why I'm here trying to pass the message back. Hopefully, the next generation of traders, right? Because traders typically, demographically, traders are between the ages of in their teens, let's say like 18 to the ending of their teens, all the way up to like probably 30, 35, And there's some other older traders, of course, not that they don't get no love at all, but majority of the demographic is males within their 20s and 30s that are trading. So I wish someone would have told me 5, 6 years ago all these things that I found out. But I had to go through the trials and tribulations to get to this simple idea and framework, bro. I had to struggle in order to get to this and describe it the way I'm showing you now. And that's GU. Let's move on to AU. Market is still live, still trading. Generally, we do this at 8 o'clock, but I got things to do. Like I said, my great grandmother recently passed away. She lived to 104 years old. Rest her soul. Love her to death, man. She's in a better place right now. So just trying to get this out the way so I can take care of other family matters, man. London session Tuesday. We're only going to talk about one day here, but look at the hindsight that we're seeing here. Sunday to Friday, premium versus discount. Look at where the sells are happening and look at where the buys are happening. I know it's hindsight. Many folks like to criticize me sometimes. A few folks, I'm not saying everybody, a few people with a lack of intelligence or common sense will sit here and say, oh, it's hindsight, Deontay. You didn't know if it was going to sell there. No, we did not know that. But we know that it's a possibility that when price gets above Sunday's opening price, ideal sales happening here. When price drops below Sunday's opening price, ideal buys happen down here. And then we break it down into those other fractal ideas and those kill zones. Let's take a look at London Tuesday. People always say, D, you don't talk about London session. I do. I'm here for you London traders for sure. I know we got a lot of people already. You guys are waking up, When you guys are going to bed, I'm waking up. So it could be conflicting. So I'm trying to adhere to everybody else that may have a different time zone. So the dead zone is going to be from midnight to 2 a.m. And then we got the London kill zone, 2 a.m. to 5 a.m. It's all New York time. It's already preset for you. If you use TradingView, it's right there. You don't got to do too much. It sets it in for you. All right. Got a little dead zone again. What do we know about the dead zone? The dead zone is going to likely consolidate. So let's find some sell side and buy side liquidity pools. We got one here. Let's play it 4 just in case. Okay, we got sell side here. I'm sorry if I'm not checking the chat right now. Really got to get through this, get this information out for the community, Sell side, buy side. We're done. We framed it. We already framed it. And this is how simple it is. I'm not telling you every day it's going to be this easy with the trade idea or the pattern, but the framework is very simple. It takes 2 seconds to frame this up. It's so simple that a kid can do this. If you teach a kid this, they probably can pick this up really quick, like a little video game. 15-minute swing high, 15-minute swing low, sell side, buy side. Great. We're above what? Sunday's opening price right there. That candle right here starts the open of the week. So we're here. So we're already in an overbought condition going into London session. We got London opening price too. Man, it's hot. It's very humid. London open. Now we wait. Now, if you are someone that has high trading IQ and you're thinking outside the box, you're in a premium already for the weekly, right? Based on the weekly candle. So you will more than likely anticipate, right? You start using anticipation skills, a run on here. You could take a buy to go up there. Risky. You could find an idea to get you up there. But you know that since we're above Sunday's opening price, maybe we're going to run up here and go down. These are for traders that are thinking outside the box and using their head. Play it forward, play it forward, play it forward, play it forward. Look at that. Look how yo, look how manipulated this market is. They kept this market so clean here. Did not want to run out that sell side at above the weekly opening price. They want to run the buy side so that they could get it down here. They have an agenda. The algorithm is very smart. It's not random. Now that we ran that buy side, everything switches up. That's the purge, the raid, the break, the liquidation, and now this is the target. That's what we're looking for price to draw to. So let's go on a 1 minute time frame and see what's going on. Go down to the 1 minute. Perfect. There goes the entry too. You know, is it? Double check. That looks like a double bottom. That looks like a double bottom. It is a double bottom. So that's not the entry I'm looking for. I'm not saying this double bottom that has the swing point going through it would not produce a setup. It could. It's just that I'm very stuck in my way and I only want it a certain way. People have too much flexibility with the market. I'm not that flexible with the market. Some things I'm willing to give up because I know there's another trading day, there's another week, there's another month I can trade. I can give that up. I don't mind that. So let's keep going forward. See if we get our idea. There we go. There goes that fair value gap again. I love this model, bro. I love the way I trade. It's crazy. Sell side here. There you go. Done. You framed it. Everything from the 15-minute time frame down to. Am I missing something here? I am missing something here. This line. Midnight. There we go. That's midnight to 2 a.m. That's the Asian lunch. I call it the Asian lunch. That's just me. Look at the consolidation. Look at that. They got traders stuck in a bind here. Got traders in a headlock right now, man. A full Nelson. You can't even do nothing. They got, oh, is it going short? Oh, it's going long. Oh, it's going short. Wait for the kill zone. Just wait for the kill zone. I'm telling you, just wait for the kill zone. Let's play it forward. See if we can get that entry. Just taps it. Like, just taps it. Just taps it. Boom. This is why ICT said institutional order flow entry drill. It's very important. You got to be here to sit here and watch this market happen. Price taps into it. You go short. Luckily, depending on your broker, hopefully it runs in and really guarantees a short. For those that know, some people even get in short earlier, just in case the market likes to play funny games with you. Because we've seen this happen. The market will steal one away from us, right? It will teeth it away from us. It won't. It'll give this entry or whatever entry. It doesn't have to be this entry. Whatever your entry is, you're looking for that entry to go long or short, and it gets so close to it, and then it goes in the other direction. It goes in the direction you wanted it to. Some people get in earlier. Some people might get in 5 pips below this. They might get in 4 pips below this, maybe 2 pips below this entry. Many ways you can style and frame the way you like to trade. That's why I love trading, because it's so unique. It's very unique. Everybody has their own methodology and ideology to trade this market. I love it. Press play. It even pulls into it. Nice. So you definitely guaranteed you got that short. Your market was your order should be filled. If you're using a limited order or a stop order, whatever the case may be, order was definitely filled. Press play, and look at that. What happened again? We went from one side of the market back down to this side of the market. I can't say much because I show the same ideas over and over. And I love when I see you guys shared in the Telegram channel. I love when I pop up and I wake up, people like, yo, AU London model, successful. I'm like, that's how you do it, my G. Great job. I'm proud of you guys. Absolutely. Played all the way through. It's kind of freezing here. Sorry, connection is not the best. What can you do? and 15 pips hit. Bingo. Now this one trade could be 1% up on your equity. Again, small numbers. Let's frame it. Let's say you got a $10,000 account. I like to base it off $10,000. I don't know why. You got a $10,000 account. You're risking 1% on this trade idea of your equity. That means if this trade wins, you win $100 because that's 1% of 10 grand. If this trade loses, you lose $100. You're okay with that though. I'm not saying 1% is the one that you like to take or if you're comfortable taking that. But if you're not comfortable taking that, risk 0.5%. What's 0.5% of 10 grand? $50. Okay, let's take $50 and run with that and keep going like that. You slowly start to compound your account. As you start getting a larger account, you start getting more comfortable, you start getting some skin in the game. There's going to be a couple days where you're like, you know what, I'm going to risk a little more. You might want to increase that risk to 2%. You might want to increase that risk to 3%. 3%, that's it. Do not start risking 4%, 5%, 6%. You're blowing your account away, man. You're giving you're giving your equity right back to the market. And that's what they want you guys to do. They want all of us to blow our market, all our money. And that's the London model for AU on Tuesday. Where does this entry form to? Above London's opening price. The same characteristics. Above London's opening price. Above the weekly opening price. Where's the midnight opening price? Let's go back. It's somewhere here. I don't know if it's up or down candle, but doesn't matter. That's the opening price there. That's midnight opening price. This is a picture perfect trade idea. This is what I envision me trading. This is what I envision me every night when I take that Asian session model idea. This is what I'm looking for. I'm looking for one side to break, the other side to come back. I love it, man. I love this way of trading, bro. Love it. And you can't tell me that this is not the truth. You can't tell me this is not the truth. Because look at how, at least in this example, just look at how perfect it is almost. It's not perfect 100% because there is some drawdown, right? For the critics out there, there's some drawdown because some people are like, you got drawdown. That's not a flex, whatever. This is a picture perfect trade idea. Now, if you had to take a screenshot of this and snapshot this and put it in your frontal lobe, bro, get used to it, bro. Make it permanent. This is what you want the idea to look like. It ain't always going to look exactly like this. Sometimes you're going to get that drawdown, and then it comes back down. Whoop-de-doo. What are you going to do? You're going to punch the screen? You're going to throw your phone? You're going to crash out? Don't do it. It's not worth your time. So that's AU. Now we're going to look at UCAD NFP idea. So the same idea that I'm telling you right now can work for NFP days. Right? I'm trying to push that as much as possible, especially with the paid group. I'm trying to push that and show those fellas and show those, this model works on any news day, even NFP. Let's take a look at one example for NFP. Right, a little freebie here. NFP is clearly over here. Look at the whiplash, man. On a 15-minute time frame, you got Sunday's opening price here. We don't even need this line here. Take that off. That's Sunday's opening price, and this is Friday. This one day right here is Friday. Let's take a look at Friday. Let's go back right before 7. Time is at 3 o'clock. All right, I got 2 more topics to talk about. $7 to $5. Okay, that's our dead zone again. Consolidation. I don't care who you are, how much experience you got in the market. I will debate this to the day I die. Consolidation happens between 5 a.m. and 7 a.m. often, very often. Buy side is right there. Mark it off. This is sell side here. Let's get it to 10. I like clean charts. Clean charts allows me to breathe. Allows me to see the market for what it is, man. Clean charts, man. No funny colors. Keep it clean, man. All right. So we got our buy side and sell side liquidity pools. We got NFP. Put the news event on here. There we go. Okay. 7 a.m. All right, nice. And we are well above Sunday's opening price. See that? What do we say about that? Ideal sells occur above it. Let's go back up here now. Also, let's keep adding all. Let's add all the layers on this. Why not? Let's keep adding all the layers. It's just 12 a.m. Or keep it simple. It's midnight opening price. Mop. Play it forward. Instantly at 7:30, 7:15. We ran up buy side. Do you see the pattern here? You see how things are just so. Once you figure it out and you actually, reconcile that the market is rigged, you're like, you know what? This is what it is. Let me take it as face value because it's not. The market will try and fake you out, but it's not doing it, and it's not necessarily doing it intentionally. Doing it because it's trying to get liquidity pools. Us personally, we're gonna take it personal and be like, it's doing it on purpose. It's doing it to shake us out of our trend or whatever the case may be. The market is just living its life. It don't care about you nor me. It just it's just doing its thing. So we ran buy side. All it needs to do is run one level. The fact that it runs two levels is it's whatever. We can make note of it. But the fact that it just runs one level of buy side, the mind should start to say, okay, we probably going back down to this. We also have this down here. Let's watch. This is advice again. You don't have to take it how you want to take it. When it comes to trading news events or a news event that's going to happen, I like to see the entry happen before 8:30 or the news event. That's one way of trading. I like to tell my traders that. I like to tell the community that if you're going to trade a day that is highly impactful or there's news in general, medium to high impact, however it's going to impact the market, you know that there's a news event happening at a certain time, look to see if you get an entry before the news event. Because when that news event drops, there's no chance for you to get in that market in that split second. The market's done. 8:30 comes out, you're done. There's no you trying to click buy. There's no you trying to click sell. The server is gonna lag. Your broker is gonna lag. You're not gonna get in at the market execution that you want. There's gonna be slippage. It ain't gonna be proper. It ain't proper. So either get in before the news event or get in after the news event. So after 8:30 drops, maybe you can still look for an idea, and whatever liquidity pools are still residing in the market are open or available for draw. Take it as you want. Let's play it forward. We broke buy side. We're looking for an idea. Look at that BPR, balance price range there. And there goes the entry. I'm about to overlook it. Entries right here. There you go. Swing low, fair value gap through that. That means we're looking to go short. We're in short here. This is UCAD, one of the majors, a good currency pair to trade. I would trade UCAD over Swissy if I had to pick between the majors. UCAD over Swissy any day. Just my personal preference. And played all the way. Boom, 8:30. Look at that. Bang. Out of there. Sheesh, man. It was already oops. It was already on its way there before the news event too. It's already on its way. There are times it looks a little different. You might get the entry and it might be in drawdown, 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 drawdown. 8:30, boom, right down. If you go on the YouTube channel, there is it a Forex Friday? No, there's a live session. that we did. I have it on. I don't know what it's titled. If you want it, you can look for it on the YouTube channel. I think it's titled like Live NFP. Right? We did a live session on the Zoom with the Telegram channel with everybody. It was free. Everybody had access to that. And we saw the same exact idea, the New York model, happen out on, was it UCAD or AU or something like that? And it played out well. It was UJ or something like that, UCAD, UJ, and it all played out exactly how we wanted it to. It was in drawdown for a while, and everybody watched it. 8:30 came and boom, and I got super hype. I was like, I told you so. Da da da. They told you can't trade NFP, but you can trade NFP. Whatever. You know, the industry is all full of nonsense, and I don't have time to deal with people that trying to scam people. And yeah, NFP drops, and look at how it drops. Look how it takes out sell side here, and look how after the 8:30 news drops, take a look at what happens after. There's a quick rebound, and then a sell back off again. Quick rebound. Price runs down and rebounds up here, and it looks to continue to go short. That same 8:30 low right here, the NFP low, is taken out. Played all the way through. And that's oh, there's still more. Where are we now? Let's see. Are we back up? Yeah, we're back up. See, I normally you often see this most times too. It's going into London close. London close is a reversal. Typically, characteristics of London close 10 to 12 p.m. You're going to see a reversal. People don't talk about that because it's not a very popular idea for people to talk about. And I guess because ICT didn't really speak a lot about London close, and he didn't really show a lot of London close setups back in the day. Now, let's say we want to go long after the short. Let's say we missed this short idea, but we're trading after the news event. Let's say scratch this, forget about this. We were. Let's say you're the trader that says, you know what, I don't want to trade because there's news. I want to trade after the news drops. Okay, great. Let's take a look at what happens after the news and see if we can frame anything. The same ideas. So price comes down. Let's see. Do we have a fair value gap? Even if it's not in the New York session either. Oh, we do. We have it right here. Let me put this up first before you see it. There you go. Fair value gap. Swing point. That's where you would look to go long. So here. You also are going long in ideal discount areas too. Yeah, you're still above the weekly opening price, but you are below midnight and you are below 7 a.m. And you take that shot and you see here it didn't work out. Not the end of the world. You move on. But then when we look forward, it's like dang, the market would have gave that idea. It just wasn't ready to give it yet. It still needed to, whatever it needed to process still. It still wanted to get to a certain level to then start gauging up. So there's probably signals. There's probably still more signals down here. And I guarantee you, watch this, 10 to 12. This is London close. Let's say we did the same idea. We take the opening price. I don't do this. Close. Opening price, 10 a.m. Premium and discount levels again, reset for this kill zone. We're looking for what? Maybe buy side or sell side to be rated. Let's go on a 15-minute time frame to see if we could frame something because there's no dead zone in between New York and London close. It's two kill zones going back to back. I don't like that. But if you're a trader whose lifestyle warrants, right? You warrant yourself to trade here because your schedule or whatever, you can only trade here. You got work or something, you know. I remember back in the days when I used to trade and I had a job, when I worked retail and stuff like that, and I couldn't have time to trade. I used to work at a was this 4 years ago? Yeah, like 4 years ago. I worked at a cannabis dispensary, right? Just over the counter. medical, cannabis dispensary. It paid great or whatever. But I had TradingView up at my desktop on by my register. Each register had a desktop, and I had TradingView open. And my manager would walk by, and she would be like, "What are you doing?" And I'm like, "Oh, I'm just looking at chart because it was slow. There was no customers coming in. It was a slow day, so I just opened up a new tab or whatever and started looking at TradingView. You know, charting up stuff, looking at gold and etc. Just learning while I'm at the job. And of course, they didn't like that. Of course, you know, stealing company time. You know, if you're at the job, your life is devoted at that moment in time for your shift at that job. So they didn't like that, of course. And I found that annoying as hell. I'm like, bro, we're not doing nothing. You just let me standing here at this register. I can't just pop up, you know, TradingView real quick and take a look at the charts, you know. But if I would have popped up something like cannabis related, like if I was looking at strains or different kind of plants or whatever, they probably would have had said nothing, you know. But that's besides the point. 10 a.m. What's 10 a.m.? Opening prices here. Let's say we're looking for buy side and sell side. Let's say we take New York session. Let's pretend New York session is a dead zone for London. Let's pretend. So we got sell side where? We got sell side here. Look at that. Haha. Sell side is ran. I know it's a lot on my chart. Let me clear this off. 10, 12, 7 and 10. Got the opening price here. London open. Let's say we were pretending that this was a dead zone, because before I said there's no dead. These are two kill zones going into each other. Kill zone going into a kill zone. Look at this. This is sell side. Rated right there at 10. Boom. Purged. What do we have available to ourselves during New York session here? We got buy side here. We got buy side all the way up here. We got these levels that we could possibly see price draw to if we're trying to frame a long idea. Let's go to the 1 minute. It is now 3:13. Okay, good on time. Good on time. This is the first. Look at this first fair value gap that forms after taking out that sell side. See that same idea happening again. The very first fair value gap. It's also a BPR. There's a balance fair value gap down, another fair value gap up. Sellers are trapped. Kudos to them. But look, very first fair value gap that forms after rating that sell side. Clean lows, 15-minute swing low. Look how price is respecting that dynamically already. Boom, looking to push higher. Printing down candles, down candles, down candles, and running away from the down candles. Let's take a look to see if we got a entry idea. There it is. Here, here, here. It's not this one. It's not this swing high. It's this swing high. This swing high is at the start of the birth part, right? The starting point or the origin of the fair value gap. I don't like that one. I want the one to be in between the end point and the start point of the fair value gap. That's it. So now it makes this entry idea possible. We could be looking for a long. Same idea. 1-to-1 here. 15 pips for 15 pips. Played out. And back up to buy side. You see how I framed that there for you guys? I didn't use an indicator, a moving average, an RSI, Ikomoku cloud, what other indicators are out there, whatever, you know. I didn't use anything. I used price. I used the swing points because the swing points are one of the most significant things to price action. That's where the orders are sitting. The orders are sitting above that swing high. The orders are sitting below that swing low. I know it's a lot more here on the 1 minute because there's a lot more data, but as we go up the chart, we go in the higher time frame, we can kind of comprise that information and see where most of the orders might be populated. A lot of the orders are populated above that high. Ah, dang, they're blowing up. Hold on. Close the window. A lot of the orders are populating above that high and above and below this low. And the algorithm is going to seek and destroy it. And let's keep playing it through. Let's see where we are now. Looks like we may get right back up here, possibly. Right now we're in the dead zone. It's Friday. Market probably doesn't have any much more to run off, unless there's some type of injection in the market or like, you know, something happens in the world. Another place gets bombed. Sadly, rest in peace, all the kids, the wives, the fallen soldiers, bro. Something in the world tragically happens, and the market, reacts off of that, and it flies again. But at this point in the time, especially at 3 o'clock, bond market close, the market is dead. You ain't gonna get much. Traders that are trying to trade FX markets after 3 p.m., you're kidding yourself, bro. You're wasting your time. Traders that are trying to trade after 12 p.m., you might have an opportunity. There might be, right? There might be something here. But after 3 p.m., that's the cutoff, bro. You shouldn't be trading. Put the phone down, go call your girl, go chill with your shorty, go chill with the guys, go do a hobby that you like. You come back tomorrow and trade. You don't have to sit here, slaving away your time to the market. Go do something else with your life, man. Go call your mom, call your dad, bro. Go hang out with your homie. Do something else. It's not worth you wasting your time sitting here. The market is always going to be there for you. It's not leaving. And yeah, that's NFP on UCAD. Take a sip of water, and we're going to get into the pair that we're trading next month, my filtering process real quick, and why I chose it, and the new IPTA levels, the new premium levels, what I'm speculating for the new month, and we'll take it from there and call it a day. Check the chat real quick. Ari solid. All right, let's get into it. So let's go into my IPTA load out. Here, open a new tab. Gold's about to make all-time highs again. This is gold's IPTA levels for July. If dollar is gonna keep dropping, bro, things are not looking good for dollar. um, Even though the fundamentals say that dollar should be stronger, things are just not looking good right now. I should keep that on chart. My pair filtering process, 3 steps. I think it's 3 or 4 steps. What did the previous candle do? Is it large or small? What is the seasonality between the quoted and base currency? Are they correlated and moving the market cold? And what is the interest rate differential between the two banks that make up that currency pair? It's a 3-step process. I like to filter out. So the one that won was EU. And let's take a look at EU. Cut right into it. With a sell signal right here. Boom, entry. Daily chart entry. Look at that smash candle. Sell, close, long. That was this daily candle. Here's the entry or the signal. Same thing here. This was the sell signal here. It's all over our charts. We just overlook it. So oblivious. But last month, let's go back to last month. Already August is pushing up. This month of July, compared to the last 3 to 6 months, right? This candle here was small. As you can see, this candle here is smaller than this one, smaller than that one, smaller than this one. So it's in a small range cycle. Quick, dirty approach to how to, see whether or not the market is in small range or large range. You can do the same thing on a daily chart. Look at the last 3 to 5 days, last 3 to 6 days. See how large that candle is compared to those, right? So this monthly candle is small. It's in a small range compared to this one, this one, and this one. It's definitely small. So I like that. So it checked off the box. I was like, okay, I like that. Cool. Next, do we have at least an interest rate differential between the ECB, right, the European Central Bank, and the Feds? Let's take a look at that. Central banks. Share this. The Feds have a 5.5 rate, and Europe ECB has a 4.25, right? So there's a difference of 1.25 between these two banks. So that's good. There's at least some interest rate differential. Not that it's a major one or is as significant as other interest rate differentials, but there is some type of interest rate differential between the two banks. So that's cool. Now, generally speaking, in bond yields follow rates. So as the rates go higher, bond yields go up. As the rates go lower, bond yields go down. But in recent time, the bond yields, the U.S. bond yields, treasury yields, have been declining significantly. The 2-year, the 5-year, the 10-year, the 30 year, 20-year, etc. Whatever bond yields you look at and track, they've been declining significantly, and they haven't even calculating that the Feds are going to cut soon. So they're already ahead of the curve. They're jumping in. Market is trying to price it in. Immediately, dollar's going to sell off. Though they have the higher rate, dollar still has to depreciate. Doesn't mean it has to just go straight up. That's not what it means. The market still has to find cycles and find ways to get liquidity internally, externally, etc. So be aware of that. Market does not move in a straight line. It may go up, but it may also go down on the up. Don't let that go over your head. So let's go back to EU. So we got an interest rate differential, which is cool. Seasonally, going to seasonal tendencies. So we have a pair, and this pair is EU. So we're going to look at euro by itself, and we're going to look at dollar by itself. We go onto this website here. This is what I use as my source. Some people use other sources. I find that this is a good source. It's free. You can use it. So we go to dollar. Oops, I didn't. I just deleted that. Euro. Now it doesn't matter if it's Euro futures or Euro FX. We're not looking for Euro to US dollar seasonal chart. No, we're looking for Euro by itself. Let's go to page 2. There it is. So we can see here the month of August is telling us that there's some rally and decline. So overall, it's bearish. We could all agree that seasonally, the seasonal tendency is saying that Euro should decline in August. Okay, cool. So if that's the case, we want to see dollar going up for August. We don't want to see dollar going down too. Then that would definitely not allow us to check off one of the filtering processes, right? Doesn't meet that requirement of market code, because dollar and euro should not be moving in the same direction. They move in opposite directions. So let's take a look at the DXY. Let's go back. So we know August is down. Keep that in mind, down. Let's go US dollar. August, we can see there's a small decline, and overall there is a bullish stance. So it's trending up for August. So I like that. So it checked off every box. We have an interest rate differential. Last month was a small range month, and the seasonal tendencies are in correlation. So I like EU as the pair, and it was the one that I preferred out of the other majors and all the other yen crosses. So I'm going with EU for the month of August. That's what we're going to be tracking for the daily updates. Doesn't mean we're not going to look at other pairs, because there's an intermarket analysis. We have to look at GU. We have to look at NU. We have to look at UCAD, USWISSy, because it could give us some insight to the pair that we're focused on for the month. So let's go back to EU and let's set it up now. Literally walking you guys through the steps of how I like to set up my chart. So we'll come to August, the official trading day, start of it there, with 20 bars here. There we go. Come on, work on me. And then 60. And then we're going to cast forward 20, because that's our playing field or time to possibly find a swing trade idea, or to find ideas where there's going to be liquidity pools that are seeked all between these next 20 days. Now, every 20 days, listen to what I'm saying. Every 20 days, the market is seeking a new higher time frame liquidity pool. Hence, look at gold. It's still on the chart. Every 20 days, the market is seeking a higher time frame liquidity pool. It got all the way up here in the last 20 days. And it was next 20 days, right there. Pay attention. At this point, we'll mark off the opening price in August. We got our premium and discount levels. Perfect. We got the 20-day high. It's already almost there too. So we could see this possibly. Who knows? Raid that high and then go short. Let's look for the 20-day low. This would be the 20-day low. So look how we're framing buy side and sell side again. You see how simple we are framing that? The framework around it. That's sell side. That's that 40-day low. This is that 60-day low here. Even though it's broken, it's still a level that can be significant. Look for that 60-day high here. And look how price stopped right on the dime at this high. Isn't that interesting? At this swing point, look at where price is trading right now. Market only has an hour and 31 minutes left. It expanded all the way up and got right here. That can't be random. No way. Market is too smart and intelligent. And let's look for the 40-day high over here. Double top too. So we got buy side and sell side here. Now we start to think about some scenarios. Okay, seasonally, it's telling us that euro is going to be weak and dollar is going to be strong. Does it have to come to fruition? No. Sometimes it does. Like last month. Last month, the dollar seasonally was bearish and Swiss franc was bullish. But I went against that narrative, right? You guys saw me publicly go against that narrative. I was looking for a stronger dollar. So that means I was looking for you Swissy to go higher. And what happened? It actually gave the seasonal tendency of a strong Swiss franc and a weak dollar. You got to move on. Now, could the same thing happen here? Is it going to follow that tendency? Yeah, there's a likelihood that it can. But there are going to be months where the pair does not follow the seasonal tendency that we see. There are times where it doesn't. And there are times where it lines up just perfectly. So, with that being said, let's paint some scenarios here. Could we see price run up, take out some type of buy side, and go short? Yes. We could see price run up, take out this high here, and then go back down to 20-day low. Purge and revert. And maybe continue trending lower to take out, return back to the 60-day low, return and take out this 40-day swing low. We could see that as well. Another scenario that could happen, let's say inverse to the seasonal tendency. Let's say price is not respecting the seasonal tendencies and the majors are just keep going higher, right? All the dollar crosses are going higher. GU, AU, NU, EU, they're going higher. So that means you're going to probably see price make some type, based on what we see now, prices either could run down here again and then push back higher, take out some sell side. Or it makes a short-term sell side. It might not be the 20-day IPTA low. It could make some type of swing low, more recent to price, run that swing low, and then push higher. That's a scenario too. So I'm open to those options too. But we like to play it by what? The momentum in the market. Right now, the momentum is bullish. Why is the momentum bullish? Because he recently broke a swing high. And my trend formula would tell me, wait for a higher swing low to form. So we're going to see in the next week or so, are we going to get a higher swing low to keep pushing price back up to this 20-day high? That's possible. And until we break a swing low, then we'll say, okay, we're in bearish momentum. We need to see a lower swing high. Then we go short. Simple. Very simple. It's a cookie cutter approach. There's a framework there is a way to flow with the market and not against the market. Sometimes we go against the market and it favors us. Sometimes we go against the market and it doesn't favor us. Like last month for me, it didn't favor me. I went against the macro information, and it made me lose my swing trade. That's it. So we'll look at DXY, and we'll leave it off here. Man, what a sell-off, man. And this is all from last month. Price traded back up into that civvy one more time, and it's gone. Took out the 20-day low, 40-day low, 60-day low, gone. It never really ran out and took out. It would have been nice to see if it did run up the 20-day high, it then went short. But instead, what did it do? It gave a mitigation. It failed to break this high. Didn't give a breaker idea. It didn't break this high, then go short. It failed to get that high, and then it went short. So we would do the same thing now. We would reset the IPTA levels. And we'll do it real quick here for August. I like to reset it every month, so I have more up-to-date liquidity pools. And if this market is truly manipulated and coded, it has to be gauging off of specific price points in time. It has to have a collection of data, right, stored in its head, saying at this, from today moving back, I'm remembering the last 60 days. That's the whole premise of it. The market is the market more than likely remembers the last 60 days of data. And in the next 20 days, it's going to do something with that data. Already too. We broke the 20-day low. Interesting. And we're below August's opening price. So if we're long and we're like that scenario, the longs to the DXY would be favorable right now. Doesn't mean you have to be aggressive and start buying dollar now and UCAD and USWISSY and selling GU and all those other things. But you start to paint the picture. 60-day low, pretty much even with the 40-day low. Put a 20-day high here. $20-day high here. And 20-day high here. 60, 60, 20-day, 40-day, 60. 20-day forward. Opening price. And we're set. That's how I like to mark up my charts every single month. Just like that. Now, last topic that I want to touch on, because we're going to do the daily tracking. We're going to keep people informed in the group and on YouTube and stuff on what's going on with EU and what trades I'm looking for and ideas. Right now, recently, the Bank of Japan, like the yen cross, I've been preaching the yen crosses for a while. And I said sooner, one day, the carry trade will come to an end. I don't know when, but it would. And we're starting to see it is coming to an end. The Bank of Japan intervened. The Bank of Japan finally moved out of a negative interest rate this year. They just recently raised rates again this year. And their intervention so far for July, sources say that they spent 5.53 trillion yen, which is equated to, I think, what, 36 billion, 0.8? Yeah, 36.8 billion US dollars. So they spent 36.8 billion US dollars, which is equated to 5.53 trillion dollars in yen, to intervene to support the yen. And I said this to the community. The Bank of Japan will do anything to support the yen. They have to, because they can't just let their currency go to nothing. The citizens will be upset. There will be a civil war. There'll be it wouldn't be right, if the Bank of Japan just sat around and let their currency be depreciated. So what you're currently watching is a fiat currency war happening because the Bank of Japan is pumping money in, right? Manipulating the market really hard. Even though it's manipulated 24/7, right? They are really showing their power here. And that's why I say people say, oh, why do you relate the commercial speculators to the central banks? Because look at what happens when the central banks step in. Markets move. They move very fast. Let's take a look at all the yen crosses recently. And I'm a further um, go into what I'm wanting to say here. Look at this. Look at this bearish trend. Swing low broken, lower swing high. Swing low broken, swing low broken, lower swing high. This is all the daily chart. Lower swing high. Swing low broken. There was a lower swing high, but then there was a false break. You see how price comes up and false breaks that swing high here? You're going to get that false break. Still prints this swing high. It's still lower than that one. So there's still an opportunity. It's still going to go short. And it does. Look at that. Another swing low, bro. A lower swing low. There might be a lower swing high that's going to pen. There might be a small retracement, and it's going to continue to drop. This thing is almost dropping like a straight line. It's crazy to see the way this market is trading right now. It's really insane. We're living through historical times. Historical times we're living through. This is AJ. It gave up so much of its gains, bro. So much. One up close candle here, two up close candles here. Those are counter trend days. One up close candle, and after that drops. Two up close candles, then it drops. Keep going. What else we got? We got NJ, same thing. This looks like, bro, this looks like a straight line down. They say markets don't go down in a straight line, but when the central banks come in, they mean business, man. They mean business. This thing went down like a straight line, man. EJ, same thing. GJ, same thing. What else we got? Swiss J, same thing. I know there's more. There's CAD J. There's so many other yen crosses, but those are the major ones I like to look at. The Bank of Japan, well, let me go back. The investors that were taking advantage of the carry trade, and what do I mean by carry trade? Well, they're literally paying you. They were paying you to sell the yen because of how depreciated it was. Sell the yen and buy any other currency you want. I guarantee you're going to make money long term. And that's what happened for the last couple of years. That's what happened for the last almost 5-6 years. Anything that was paired against the yen gained value. You go back to 2019, you go back to 2016. That was really where it started, 2016. For all those years going forward, anything that was against the yen was stronger. And they made trillions of dollars. Of course they did. They made trillions. And now that things are getting shaky and the Bank of Japan is now changing their monetary policy, the carry trade is unwinding and investors are getting out quickly. Quickly. They're selling off. Right? The commercial speculators are coming here and moving this market down. So it's going to cause what? Panic. It's going to cause panic. People are going to lose money very fast, especially in these carry trades. Because the whole idea of the carry trade is that the yen is weak, but the yen is starting to gain strength. Let's take a look at the yen futures. Yen went up in a straight line. Oh my God, bro. It also produces the same idea. Higher swing highs, higher swing lows, higher swing highs, higher swing lows. Every down candle, look at every down candle, down candle, down candle, down candle, down candle. All buying opportunities. You can see how this could be insightful as a swing trader or position trader. If you know the trend, just wait for a counter day and buy or sell after it. It's insightful. It's hindsight though, but it's insightful only if you're able to utilize it and get it right, of course. But now the Bank of Japan is stepping in and saying, yo, we need to come back. We need to make a strong comeback. And I want to see where 2024. Oh, wow. It got back up to the yearly opening price already. Is it close to it? Oh, it got real close. Tuesday. Oh, yeah, Tuesday, because the 1st, January 1st is a new year, so it's a holiday. Markets are closed. 2024 is 2024. 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 2024 is I don't know if that's a weekend. No, yeah, the markets are closed. It's a Monday. Look at the yearly opening price. YOP. Haha. YOP, these acronyms. YOP. Yearly opening price. It dropped way below the yearly opening price, and it looks like it's trying to get back up above the yearly opening price. Buying below the yearly open. This is more of a complex idea, because it's very broad and general, because we're talking about the yearly open, but it's layers to this stuff, guys. Layers. I think we're gonna end off here. It's 3:42 currently. If you have any questions, if you have any concerns, please ask me now. I'll try my best to answer to the best of my ability and the best of my experience. If not, I will see you guys for August. Welcome to a new month. I'm proud of you guys. I hope you guys succeed. Whether or not you're winning big, you're winning small, or you're taking small losses, or you took big losses, I'm rooting for you. If nobody else is not rooting for you, best believe Deontay is rooting for you. Okay? Check the chat. All right, guys. Give you guys a couple of minutes, see if there's any questions. But good night. Good night, my man. All right. I think we're solid. All right. Take care, folks. Love.